Welcome back to the Dividend Diplomats YouTube channel, guys. You got your favorite brothers over here in the dividend investing game. Bert, the Hurt, and Lanny, guys, the dividend legends here, the best dividend investing channel in all of social media, guys. And we're going to dive into healthcare on the insurance side and the pharmaceutical side. And are these two stocks too low to ignore at this time in 2025?
Smash that subscribe button, everyone. Give this video a thumbs up. Let's freaking go. Can't wait to talk about two dividend stocks that we are going to evaluate to see, are they too cheap to ignore and are they buys right now?
Yeah, it's always fun talking about dividend stocks, guys. And,
Like it's not fun at all.
Yeah, we hate it. We've only been doing it for 15 plus years. I don't know, but Bert, you're getting a little vibe from the investing community. Is dividend investing losing its flavor? Do you have any feeling about that? As he chugs water, he's not sure. He's thinking about it. Look at him go! Jesus.
Yeah, that coughing ain't gonna stop it. So, no, I don't think dividend investing is losing its luster. I think dividend investing has just evolved over the last 15 years since we began, where it's been more start on the individual stock spectrum, where it's all about finding the individual dividend stocks, finding the value. But with the emergence of so many great ETFs, like your VYM with your SCHD, and so many other ETFs that can produce income at many different levels where you don't have to go through the individual research, maybe buying individual stocks has become less prominent, but people are still dividend investing to grow that passive income stream, to reach financial freedom, whether it's through those stocks or the ETFs.
I dig that. What do you guys think out there in the community? How is dividend investing right now perceived by the investing community? Let us know in the comments. But as we said and introed earlier, guys, we're back into healthcare. Yes, this is another healthcare stock type video because there's been a lot of noise, especially across many industries. Again, RFK being nominated, being in the seat here potentially, and the ramifications that could trickle throughout the healthcare industry, the consumer goods, snack industry, beverage industry. And has it been overblown? Or is it just too much noise that you don't want to have anything to do with it? Mm-hmm. But from an investing standpoint, are there opportunities right now that, investors are missing out on because they're not just saying, hey, this is an opportunity right in front of our face, and in 3 months, 6 months, this will not be here anymore?
Yeah, and that's the thing that we have to do, and that's what we try to help with, is by trying to cut through that noise. And we focus on those companies that have been there for a while, the companies that have paid dividends for generations. Some of them have grown dividends for decades. Some of them have grown for 15 plus years. Companies have shown that through good times and bad, they can pay the dividend and grow the dividend. They can cover different economic cycles. They can make it through different administrations. They can make it through different philosophies and shockwaves that may impact the industry.
Exactly, guys. And these are two stocks I think that both Bert and I own. I own a lot of both. Probably have invested over $5,000 of my own money into both of these stocks. And you'll see one's a high yielding one, one's a low yielding one. One's a high dividend growth stock, one's a low dividend growth stock. But it's all in the healthcare area, one on each side of the table. So, guys, we're going to talk about Elevance Health first off. Ticker symbol is ELV, formerly known as Anthem Insurance. So, Elevance Health. They're still trading at 385, Bird.
Yeah, and I love this one, Lanny. I followed your lead recently this last year, building up my position in Elevance Health, and I'm on that journey towards at least 10 plus shares of them. I'm getting pretty close. Seeing them in 380 is still great. They've had quite the month though, Lanny. Quite the 2025, I should say. They're up 5%. They had their low this year where they were in the 360s, where I think I scooped up 1.5 shares. I should have grabbed more, but we're going to look at these metrics while they're in the 380s and see, are they still looking pretty solid right now?
Yeah, I'm just talking to Bert before we hit the record button here is, dang it, I can't believe I didn't grab at least one more share of Elevance when they were in the 360s. Kind of mad at myself because now they're up $20 a share. already here in 2025, and we're only in 2 weeks so far, guys. So whoever's been buying Elevance in the 360s, bravo, you're up over 5% already in such a short time frame. But we're going to dig into the metrics too, again, on these two stocks. Again, first, Elevance Health. We'll look at the PE ratio, payout ratio, dividend growth rate, and dividend yield, guys. We're trying to see if this is still a good stock to buy right now, because we've been buying both of these stocks. I know I was buying both of these stocks in 2024. So again, they're still trading at 385.26. At one point, this stock was trading well over $500 a share.
Wow.
So they are down 20% in the last year or so. And that PE ratio right now, Bert, is under 12 at 11.69.
That's wild. Let's see what that payout ratio is. Their annual dividend is $6.52. That's a payout ratio of 20%.
Yeah. So low, so safe, and plenty of room to still juice up that dividend, Barry Bond style, guys, because that 5-year growth rate. They're paying $1.63, $1.63 a quarter. Flash back 5 years ago, they were paying 80 cents a quarter at the end of 2019. So over 5 years, I actually took that, did the math. They're actually averaging over 20% dividend growth over 5 years.
All right. So, they're 13 plus years, almost a dividend aristocrat. Halfway to becoming a dividend aristocrat. Let me rephrase that. I skipped that part. Their yield is at 1.7%. Lanny, it's crushing that 5-year average dividend yield of 1.08%. That's a huge margin.
And that's what you got to like about it, is that it's at a yield that you rarely get it at. And I don't know, there's a lot of noise within the industry. RFK, UNH, Medicare, Medicaid, a lot of things, again, with UNH. And UNH just had their earnings. I haven't read through it yet, but I know that they may have missed expectations, which might drag down Elevance here. Again, we're recording this on January 16th, Thursday night. So everything is as of that time period.
The one I'm seeing on Seeking Alpha says post rare quarterly miss amid rising medical expenses was the Seeking Alpha headline I just saw.
Okay, so that might have a trickle effect into some of these other carriers, such as Elevance Health. Again, up 5%, over 5% this year, down about 20%. 88 billion market cap, solid balance sheet, very liquid balance sheet at 1.5 times on the current ratio / quick ratio, because they don't really hold inventory. And they've been buying back shares left and right. The share count is significantly down year over year. So
beautiful.
It's a great stock. And I still think if you're looking to buy, this is a great stock. I might even add what sucks about Ally Investing. If you're listening to this, change your platform, because I'm about to move off of it because I can't buy partial shares.
Yeah. And this is one, that's where I was looking at my purchase history. When I thought about it, I didn't realize I'm at 9.93 shares of Elevance. So I'm almost at my 10 because I grabbed one share at 370 and then a half share when it was at 360. So I definitely got the benefit of throwing in that half share.
And again, I buy my Vanguard ETFs in SoFi's app. It's the best, easiest app in my opinion. My link below is in the description in case you want to sign up, earn yourself some free stock. And I would hate to start buying my individual stocks in there and have them on 2 platforms. So Ally, I'm gritting my teeth. So that's Elevance Health, guys. We'll throw those metrics again. But Bert, let's dive into the second healthcare stock.
Pfizer, ticker symbol PFE, the one that really brings out the emotions of people. Pfizer.
Let's hear it.
Yeah, Pfizer is down 6.46% over the last 52 weeks. They're basically flat so far year to date, down 0.45%. That price, though, has hung below $30 per share for quite some time, Lanny. It's been in the 26s of late, 25s, even 24s. So Pfizer has some chance to show some real value as you're going through it. And much like you were saying about Elevance Health, big farm, don't care what you're going to say. You're going to have some shakeups in the industry, but you're still going to need it. You're not going to be able to reverse the years and the decades of what's been done and what's been set, especially in our healthcare sector. That's not changing.
Yeah. I mean, Pfizer, guys, again, I know, the vaccines, I know the commentary, I know COVID, that a lot of that's hopefully getting in the rear view. And let's just focus on the metrics here. They're getting to $26.49. I think Pfizer had a pretty good quarter in Q3. Again, we don't know what Q4 results are looking like, but there was a lot of momentum after that third quarter earnings release. The pipeline was looking great. A lot of positive momentum for Pfizer stock based on expectations of 293 adjusted EPS. The PE ratio is 9 times earnings.
Oh, man, that's nuts. Payout ratio is also pretty low, too, Lanny. Their payout ratio at that $1.72 dividend is 58% below 60%. Wild. Absolutely wild.
Yeah, not too bad for Pfizer, guys. Now, the dividend growth rate, they've been doing about a penny a year. I think they went from 42 cents to 43 cents. So the dividend growth's been very low even after. But, hey, they've still been growing it throughout the turmoil, throughout the divestiture and the joint venture of the Mylan and, the Upjohn business, creating, Viatris. So they still have been increasing the dividend. Again, it's low at 3.14% average dividend growth, but they've been doing it for 14 years plus.
Yeah, and that yield, Lanny, Pfizer below 30 gets you a pretty high yield. Pfizer below 27 gets you an even higher dividend yield, Lanny. That yield is 6.49%. Man, that is so far above its 5-year average dividend yield of 4.49%. Absolutely insane.
Yeah. 2% higher, guys. They're yielding well above where they usually are. Again, down ever so slightly this year, down over about 6.5% since last year. Still 150 billion in market cap, so 2 times the size of Elevance. Current ratio is about 1 times. And then when you take out inventory, their quick ratio is about 0.73. So not the worst. I would love to see it higher, but they actually passed my quick ratio metric, my baseline there. The interesting part is that the shares outstanding, and I have to look back if this is from some acquisition stuff that they were doing, but their shares are actually up right now from year over year.
Interesting. So that's Pfizer, everybody. Lanny, we'll put the metrics up here. Yeah. Elevance, just as a reminder, everybody, price is $385. Pfizer's $26.49. Lanny, do you think you should be buying healthcare? And if so, what are those target price points that you are thinking for these two right now?
Again, if you think if any of the UNH rubs down on Elevance Health on January 17th or later, even if I might even say 5%, because 5% is, again, almost $20 a share in price depreciation. If I see it in the 370s, I'll pick up a share of Elevance Health. Again, give me just a few percent off right now so I can keep averaging down my price. Pfizer, I'm going to look at how much I own, and I might be a buyer here, not a ton, but I might throw $100 and grab 3 or 4 shares of Pfizer.
It's a good nibbling one right now, especially at $26 a share. It's easy for you just to pop in. I want to buy something no matter what the dollar is and grab a share, a 2, 3, or 4 even for Pfizer.
Yeah. Again, guys, let us know what you think of the healthcare industry. Are you buying these 2 stocks? Let's take out Eli Lilly, Merck, Bristol Myers, UNH. Would you buy these 2 stocks? If so, why? And if you wouldn't, why would you not buy these stocks right now?
If you haven't already, subscribe to the channel. Give this video a thumbs up. And Lanny, what do we have to tell all the diplomaniacs out there?
You listen up, brother. You're either with us or you're against us, Jack. That was Bert the Herd and Lanny from the Dividend Diplomats. Over and out.